Hey guys, welcome back to the channel. In today's video, we're going to be talking about SVB, the bank that just failed out in California, guys. Now, this bank, if you are unfamiliar with it, as I am, it is really the go-to bank for tech startups. Came rapidly unglued on Friday, leaving its high-powered customers and investors completely in limbo. Now, we have seen banks almost fail, kind of failed us as a consumer aspect and a couple different aspects, even looking at the housing market where the government deemed them too big to fail is kind of a catchphrase that came out there. Silicon Valley Bank, which is SVB, suddenly had a bank run and a capital crisis, collapsing Friday morning and being closed by the FDIC. Now, if you're unfamiliar, guys, the FDIC is an insurance that banks do provide. When the bank fails, they protect the consumer side of it up to a certain dollar amount. Most of them are $250,000. But the question lies with that. What happens past the $250,000, which is a very, very good question. So first of all, guys, why did the bank fail? It was a very classic run, like we've seen in the past. Long version, of course, a little bit more complicated. When people started hearing that there was going to be some issues with the bank, possibly some liquidity issues, especially with when you counter in inflation, when you counter in a lot of different factors, guys, it all boils down to kind of poor planning on their part. They should have seen it coming. They could have seen it coming. A lot of other institutions that were in a very similar boat as SVB did see it coming. Higher interest rates eroded the value of long-term bonds. So SVB held a lot of long-term bonds. Other banks took them up when it was ultra low, near zero rates. They had $21 billion. That is right, guys. 21 billion with a B bond portfolio, yielding an average of 1.79%, according to CNN. 1.79. Now, the current 10-year Treasury bond is almost, or the Treasury yield is almost 4%. So literally, they were so low on the yield, they weren't making any money with that 21, again, billion dollars in bonds that they possessed. So the theory of events, guys, on Wednesday, they announced they sold a bunch of securities at a massive loss, and that it would also sell 2.2 billion in new shares to shore up the balance sheet. Now, again, they were looking to raise capital, knowing the writing was on the wall, knowing that they were going to essentially not have enough money to cover everything that they needed to. That triggered a panic among key venture capital firms who reported the company might be insolvent, meaning that they cannot cover all of their debts. And that is kind of what happened. The stock started plummeting, meaning that when they were going to sell the stock, those $2.25 billion in new shares to really shore up the balance sheet, the price was not there, guys. Literally, people started dropping this stock like a rock when it came out on Wednesday into Thursday. So if you were early to get out, you probably made a very, very wide decision. If you held on to it, guys, unfortunately, it looks like it is going to be gone at this point. When it started dropping, this is what we've seen kind of in the 2007-2008 financial crisis, again, with the housing market. By Friday, they have halted all shares. Shares were halted in the abandoned efforts to quickly raise capital or find a buyer. Now, at this point, guys, there is still an opportunity for someone just to buy the assets. Don't know exactly what that is going to look like, but this makes a lot of unsettlement and a lot of unease when it comes to the banking industry, because if a bank as large as SVB can fail literally in a matter of 2 days with everything that they had and how large the bank was, what keeps your bank from doing the same? This, of course, was a huge panic on Wall Street. As you've seen Thursday and Friday, not only did their stock collapse, but it literally took down the entire financial industry with it. Bank of America stocks were way down. Chase stocks were way down. It is going to recover. Essentially, they're saying this is kind of a learning lesson, I guess, is what they're kind of calling it. More of a learning lesson, which can affect large banks that don't have the liquidity, but also much smaller banks, which can be a threat really to the financial industry as all. So what is next, guys? It's very unlikely that this is going to go into other banks, into some of the national banks, some of the global banks. Smaller banks, again, tying up too much cash in different things, especially as the values do change. If they would actually liquidate it or got rid of some of those high or those very, very low yield bonds a while ago, could have been a lot easier and a lot more advantageous for them. Now, the other big things is startups. This company, of course, this banking institution was very big into tech, very into startups. If you followed any of the tech industry, the financial side, tech stocks are not really doing the great right now. They've seen a lot, and also crypto market being absolutely affected by this, guys. It is kind of a rough, long ride so far that we've seen in crypto over the last couple of years, as it gets like the legitimacy of the government, the regulation, more financial institutions that are in it, especially because we just seen Silvergate, which of course is having a very, very tough time as well. A lot of these companies were getting to a point with interest rates where if the Fed fund rate continues to increase, guys, you really do have to brace down, stick to the budget, minimize your spending. Like I've said before, sit on a little bit more cash, be a little more cash heavy. Make sure that you have a contingency plan. One of the big things, guys, is if there is something that happens, such as the job loss, an unexpected expense, you need to be able to cover that, and you need to be able to cover it within a very short amount of time. Now, at this point with SVB, the FDIC typically sells a failed bank's assets to other banks. So I believe at this point of reading and kind of going through a couple articles and doing some research, there has not been any buyer for SVB, which means the assets, when you look at physical assets, when you look at the accounts, when you look at all of that, a lot of times there will be a larger national bank that will kind of acquire them kind of on pennies on the dollar. Now, FDIC has also stated that the insured money through the FDIC has been paid out, which again, I don't know how relevant that is or if it has actually happened, but depending on what happens to the additional assets, remember the FDIC only insures up to a certain amount. They're going to be doing advanced dividends next week, but anyone above that $250,000 is considered an uninsured depositor, or anything that is above that FDIC limit. Now, one of the questions that came in were larger companies, larger tech startup companies that are invested or hold their funds with this institution. What is going to happen to that? I know there's a couple, again, a couple articles that I've kind of seen out of there, which Silicon Bank companies or which companies held a majority of assets in Silicon and SVB Bank, Silicon Valley Bank. What is going to happen to all that money that they're essentially not going to be able to recover because of the closure? Not sure if it's the liquidation of assets. It is really, they're considering it the second largest bank failure in history. So guys, again, no reason to panic, no reason to run on the banks at this point. It seems like it was a bank that really needed to really stick to the plan, stick to the solvency, stick to a lot of different things. Again, it doesn't seem like at this point there is any other issues with other banks. Just be aware, stay abreast of the news, guys, because you never know what is going to happen for other institutions or other companies, essentially, which house their money within SVB, which could affect, of course, stock prices, could affect solvency of those companies, but we will have to see. All right, guys, so that'll do it for today's video. Let me know in the comments what you guys think. Again, all of my followers out in California, I don't know if you had money there. I don't know, again, if they were on the personal side, which it seems like they were kind of across the whole entire board. But if you are affected, guys, definitely hold tight, see exactly what is going to happen. Until then, let me know in the comments what you guys think. And as always, thank you guys for watching.